Hi, welcome back to Longevity in the Merciless Market where we're going to talk about different trading strategies across different instruments. And next up is Carl, the founder and market mastery and head of trading at York Street Capital. So, Carl, he is going to talk about swing trading crypto markets to build a seven-figure portfolio. And if Carl, if you're ready, please take it away and share with us your thoughts.
Thank you, V. Nice to meet you guys and welcome everybody. Just going to get up my slides quickly. All right. We're going to be going through a bunch of different stuff today, mainly how we train and teach our members to build portfolios in the cryptocurrency markets. I like to swing trade mainly. I think that's the best way to trade the cryptocurrency markets. Just want to introduce myself quickly first and my team. This is the Market Mastery team. I've been running Market Mastery, which started in 2017, which was the great crypto bull run. We've had over 4,500 students educated so far. We've built multiple seven-figure accounts across all of our students and our team, ourselves. And just more recently, over the last year or so, I've taken on a role at a crypto algorithmic trading firm based in Melbourne called York Street Capital, and I'm the head of trading there. So yeah, we've got some great results. Just want to share that with you guys so you know that it's actually worth listening to what I have to say. So this is some of our students' awards. We give these guys out awards when they hit milestones in their accounts, in your 100K, 500K, or $1 million club. And here are some of our testimonials from different guys that have done really well in our community over the last couple of years. And then the thing that I do with the hedge fund, I work on algorithmic trading strategies. So they're like auto trading systems. And this is one of the ones that we've been building over the last 5 years. This has been running live for. It has a 73% win rate and produce a net profit return. So that's after fees of 309% over 5 years. So that's the kind of stuff that I work on with the hedge fund, and we're constantly building out new algorithms and stuff like that. And so, yeah, hopefully I've given you guys enough credibility that I actually know what I'm talking about here and have a load of experience. I've been in the cryptocurrency industry now, full-time trading for 9 years. And this is my strategy on what I believe is the best way to build a seven-figure portfolio with crypto. So the first thing that you have to understand is you have to have these three core systems of understanding how to enter trades, rotate through what we call altcoins, which is any other coin other than Bitcoin, to increase the amount of Bitcoin that you're holding over the cycle. And we like to use our long-term VWAP system. And I'm going to be teaching you guys mainly in this session what our long-term VWAP session is. And we're also going to touch a little bit on accumulation and distribution as well, because I believe that they are both crucial to understanding how to build an account and also actually getting the result over the long term as well. I'm going to show you guys a bunch of trades. I've also been managed to snipe amazing entries in the accumulation ranges that have gone on into markup and made heaps of money from those. I'm going to give you guys a couple of examples of long-term VWAP trades as well, and then a really nice distribution trade, how we picked the top this cycle on BTC. Okay, so accumulation. This is the first thing you really need to understand. And this is basically, Richard Wyckoff's amazing accumulation idea that basically what happens when a stock or a cryptocurrency like, Bitcoin or Amazon or something like that, or Palantir is a great example that I nailed a trade on. I'm going to give you an example in a minute of that. When the larger players in the market are actually establishing positions before the market is getting ready to take off, what will happen is they will generally go through what we call an accumulation phase in the market, right? And, there's all these little, intricacies of the entire range. And to be honest, you don't need to know them. In our course, we go through a 3-hour session to break down every single part of the accumulation range and where you can enter in and get into trades and how you can take the best advantage of it to position yourself for the cycle. But in reality, the main thing you need to focus on is the range high and the range low. So the first thing here is the selling climax, and then we have the automatic rally, right? And a lot of the time what will happen is you'll sweep the selling climax either once or twice, and then you put in what we call the spring. And this is typically when the largest players in the market are actually loading up and establishing a position to move the market then to the upside. Because you have to think about it like this: the largest players in the market, they're so big, they're trading with hundreds of millions of dollars, with billions of dollars. They can't just click market buy like they've got a $10,000 account at any point that they want to get a fill. They have to trick the less experienced traders in the market to sell in panic for them to be able to take a position that's large enough to actually fill their bag. So what they do is they create this trading range and they manipulate the psychology of the younger traders in the market to get them to sell and capitulate into and just below the range low, which is when they come in with the biggest amount of buying power and then push the market back up. And now their position is established. And then what happens is you rotate to the upside of the range and you break out of the range high. We typically put in what's called the sign of strength. And this is the last position and entry position that you can get in before the market really takes off and goes nuts. So first entry trigger is a reclaim of the range low. Then sometimes you can get in on like a bull flag or something like that in what we call the LPS, which is like a sideways accumulation just on the lower time frames before this next part of the rotation to the range high. And then the sign of strength is just another type of a bull flag, usually lasts a little bit longer than the LPSs. And then the market takes off. And these entry triggers have served me so well over the last couple of years. And it's probably, I should say, the last few years, it's realistically been the last 9 years I've been using this trading strategy. And it's helped create hundreds of thousands to millions of dollars of value to my portfolio. So here is a really good example of the 2019 bear market accumulation range on Ethereum. You can see that we had multiple bounces inside the range, and we didn't quite get the spring coming right below the selling climax, but we eventually break out the top of the accumulation range and we flip that into our sign of strength. And you can see after the sign of strength, which is this point here, the market finally goes into markup and absolutely launches. So when we're trading cryptocurrency, the best way to make really good money, everybody wants to trade crypto because they want to trade, change their life and have these couple of trades that just make unbelievable amounts of money. And that is not the easiest thing to do. The thing is, it isn't actually that difficult, but you have to have patience and you have to be there at the right time. You have to be there to take advantage of the opportunity, typically when nobody is interested in the cryptocurrency markets. And this is the same as the stock market as well. All of the stocks, I'm about to show you a couple of great trades I've had on stocks with very small positions that have made a lot of money. I accumulated all of those in accumulation ranges, just like this one in 2019 on Ethereum. They basically all look like this. And this was when nobody cared about the stock market because it was in 2023 after we just had, the big COVID pullback. We finally moved across to quantitative tightening. And we had a huge bear market for the whole of 2022, and everyone was sad and sour. Michael Burry was posting sell and telling everybody that we're going into the worst bear market in history and we're going to have a Great Depression for 10 years, and nobody was thinking about buying, right? And that is when you need to be paying attention, okay? You need to flip in your mind, the whole graph. Some of you have probably seen it before. When everybody's talking about it, that is actually like gold and silver at the moment. That is typically the time of greatest financial risk. Like you wouldn't want to be taking long-term positions in gold and silver. Like use a strategy like what Alex was talking about just before that has a hard stop and a break. You know exactly where you're going to be getting out. You can't be taking long-term positional swing trades in gold and silver right now because you're getting in at the height of maximum financial risk, which is at the moment, that's when everybody's paying attention to those markets. So you want to be paying attention to the markets which nobody is interested in because that is where you have the greatest financial opportunity. It's the forgotten markets that nobody's talking about because eventually they'll build momentum again and they'll take off. And that was Ethereum in between its 80 to 240, 260 dollar range back here, which lasted about 2 years. It was pretty much the whole of 2019 and a lot of 2020. And then it finally took off and it ran from, the lows of $80 all the way, it's hanging around. Well, it was at $4,000 at the top of this bull run, right? And yes, that's the swing that you want to be able to take advantage of, right? That's where you make the big money in the cryptocurrency markets, right? So here is a few examples. So you can, I always believe that you should show proof that you can actually do what you're teaching. And so these are a couple of trades on stocks that I have taken positions in. You can see this one, I took a position right after we'd broken out of the accumulation range. And this was on a falling wedge pullback right in the sign of strength. So this is this position here. Right, these were all quite small positions. Right, this position ended up turning into $10,000 on that one. This one here, same thing. You can see sideways range in here. It's quite compressed at the bottom, but back then it looked like this. And there were huge swings. Obviously, once you get markup, it compresses that range down a lot, right? And you can see I did the same thing here. I bought this one more in this area here in LPS, and this in this setup, it actually swung all the way back and retested the selling climax range low before taking off again. But this trade ended up being $19,000 of profit, right? And I put into these trades only a couple of $1,000s each. And so they were just like positional long-term trades. I wasn't really thinking about because I mainly focus on the cryptocurrency markets, but I was like, look, let's just build a little bit of a stock portfolio. I put about $30,000 in it to start off. That added to it a couple of times. That portfolio, after about 3 years, is up over 320%, right? So 10K on that one, 19K on this one, and then this one, $92,000. It's all the same thing. You can see that dot is actually a little bit higher because I got a really, really great entry on this one. And then I actually added to it after it broke out and it was in its reaccumulation range. So this is Palantir. Some of you guys might know that. It was one of the best performing stocks in 2024, 2025. But I got this one pretty much right in this area here after we had put in a bit of a spring. And then I also added after we'd broken out of the range and I could see that this was a great trade. So I wanted to add into it again and I doubled down and it ended up paying off really nicely. And I have taken profit off this already as well a couple of times. This ended up making me over $120,000 in total just from understanding this one thing, getting positioned at the right time, and then waiting, right? Having conviction in the assets you've gone into. And I was also trading a cyclical swing because we'd just been in a bear market in the stock market for a whole year, or the whole of 2022. So I was looking for great companies that were in sideways accumulation ranges like this because I'd seen it happen so many times in the cryptocurrency industry. Now, the good thing about trading cryptocurrency markets versus trading the stock market, typically you don't get a bear market very often in stocks, right? So in the stock market, we pretty much went from 2008 to 2022. That's 14 years before you had a bear market. In the cryptocurrency markets, usually it takes about 4 years. Typically see a 4-year cycle. Now that could change because it's becoming more of an institutionalized market, but we'll have to see what happens. But the cryptocurrency cycles are typically much shorter than what we see in regular markets. So that gives us more opportunities to buy great projects. They're still building, they're still doing good things that are in accumulation ranges. A bunch of our guys in our team managed to buy Solana around the $12 to $18 mark back in 2023, and it ran all the way to $300. Those are the type of trades that build seven-figure portfolios, right? So you have to be paying attention. No, back in 2023, no one cared about Solana, but our group was focusing on these assets because, we focus on the cryptocurrency markets and we're sort of diehards and obsessives and probably cared a little bit too much about cryptocurrency markets compared to everybody else. But we were locked in and we were focused, and that ended up paying off for us, right? Because we were accumulating at the right time in accumulation ranges. Okay, so step 2, once you know how to understand and you can accumulate at the right time, and you know exactly how accumulation ranges work and where you can take entries while being safe, which is the most important thing, because you can't just take entry and then it rolls over and not know what to do, right? You have to know how to take safe entries and get good positions that you can actually hold, right? Because if you get a good entry, your conviction to hold the trade is much, much higher. Okay. So once you understand how to do that, the step 2 is rotations. This brings us to basically the core of the presentation today. I want to teach you how our long-term VWAP system works And this works not just on cryptocurrencies, which works amazingly well on, it also works on the rest of the markets as well, right? This is actually a trading strategy that is invented by Goldman Sachs. And we really loved it and we stole it and applied it to the cryptocurrency markets, and it just works really, really well. And I sort of see it as it creates a high time frame map, especially when you use the yearly VWAPs, and then we have the value areas, which are one standard deviation either side of that. So basically, what we're looking at here is at the start of each year, we get this little blue squiggly line, which is just a volume weighted moving average, and it basically tracks the price. And then what happens is we have a standard deviation either side of the moving averages, sorry, the VWAP, I should say. And that gives us our value area. So we have value area high, which is the upper band, and we have value area low, which is the lower band. Now, these big squares that come out here and out here, that is just where the value area high and the value area low finished from the last year. Now, they can be very important as well, and we can take trades based off both. So just think about it as the blue line in the middle and the gray band either side are really good support and resistance levels, right? And the main trade that we want to take is when you come in, let's just say, for example, here on Ethereum, right? We break inside the range and then reject off the top of it. That's what we call our inside break trade. And then we're looking for a rotation down to the blue line, right? Same thing here. It ends up running very aggressively off the blue line, breaks out, but fails to get a continuation rally, right? Which would just be a bounce off here and then another push higher. I'll give you some examples of how that looks soon and how to trade that. Gold and silver, really good examples of that. But then we have inside break here, really nice inside break setup. And then you have rotation down to the value area low, right? So that's all. It's a very, very simple trading strategy. I think the best trading strategies should be super simple. But basically what it tells us is when you're above the value area high, the market is very bullish and you want to be looking for the market to continue to upside. When you come inside the value area high, you're looking for a pullback to either the VWAP or the value area low. So it gives you like a market map. It tells you if you want to be risk on or risk off. And I think this is great for people who are trading positional type of trading where it's like, hey, you might have a large spot portfolio or something like that. It's much different to trading like low time frame day trading strategies and stuff like that. It's very, very helpful for positional trading and managing a portfolio across various assets, right? You can also use this trading strategy on low time frames if you want to as well, to do shorter day trading trades. And you just put your stop loss either side, for example, but you're still using it as a market map. Is the market strong? Is it weak, for example? So one of the main trades that we look for here, this is an example on SUI that I took back in 2024. And a lot of the guys in our community nailed this. The whole market was starting to shift back to the upside. And we can see that we actually went through a large, this is basically called a falling wedge. You could also say that this is kind of a declining accumulation range through here. So it's kind of, it's a bit more of an advanced way of looking at a wick off accumulation range. And you're constantly getting sweeps of the low here. But we don't need to focus on that too much. The easy way to look at this, right, is we can see we have the previous year value area low through here, and we dropped below that. And then once we reclaimed that and we were holding, right, dropped below it one more time, come back in it here, but also we get finally acceptance back inside the developing value area. So we can see we've got our blue line through here, value area high up here, value area low down here. Once we break inside the value area low, we get a nice push in, a pullback, and a higher low. So this is telling us the market is getting ready to move to the upside. As long as it can hold inside the value area low, we're looking for a rotation to the value area high. We can see when it finally breaks back in, bang, we've got that really nice value area high rotation. Now, it tries to break out and have a really nice continuation run. It's not strong enough yet, pulls back, and what does it do? Bounces perfectly off our VWAP. So this could have been another great entry, right? And then let's just say you missed this one and you might be looking at the market and you're like, where can I get in? Where can I get in? A breakout of the value area high here could be your next trigger with putting a stop loss just below there, and you integrate trade. And then every time it comes back and bounces off the value area high, which pretty much all assets that are trending do this consistently. And the reason why this works so well is because asset managers use VWAPs, and they use VWAP standard deviations, which is the value area high and the value area low, to average in and out of trades for their clients. And it's a safe way for them to not have to stress about getting a bad entry or mistiming the market or anything like that. And they go, look, I just use the VWAP to enter and exit for you, right? It's a safe way to, reduce their stress of trying to nail the top or bottom of a market, right? So when, for example, the market comes and bounces off the value area high like this, it's telling us that the market is most likely going to continue to the upside, right? Obviously, we know that markets are random. Nothing ever works 100% of the time. It can bounce off the top here and then just roll over and come back inside, right? That means we have to make another decision to cut our trade or flip to, expect the market to pull back to the value area. That's like basically what happened here, right? And then we will look to retake the trade if we get a really strong reaction off the VWAP. Okay. So let's go over that one more time. There's about 8 rules to this trading strategy. We're just going to focus on one here because I only have a short amount of time. We actually have about 12 hours of content just on this trading strategy inside our course. So it's hard for me to get the whole thing across in just 40 minutes, but I want to just focus on the main one that we look at. And this isn't just a diagram. This is actually a live, actual real trade, right? So we break into the value area low and then we bounce off that. So this is what we call our inside break trade. So it's called an inside break because you're breaking into the inside of the value area and then you bounce off the value area low. Our first immediate expectation is it's going to run to the VWAP, right? If it can reclaim and push above the VWAP, then we're looking for value area high. Now, let's just say price was chopping around through here and it was sort of what we would call in balance when it's hanging around the VWAP, right? And then you get a nice break above the VWAP and you get another bounce off the VWAP here. And you can also see lower time frame. There was actually a swing low, a tiny swing high, a swing lower low, and then a swing high here, and then a higher low gets put in. That's an inverse head and shoulders off the VWAP. That could have been another great trade. So it just creates so many trading opportunities that you can have a lot more certainty by overlaying basic charting principles like, a falling wedge, a bull flag, inverse head and shoulders, that kind of stuff. Let's just say like a swing failure pattern, a Morningstar reversal, a bullish engulfing off these key levels that are given to us by the VWAP, which if we see those start to kick in, it's telling us there's likely a large player in the market averaging in or out of trades along the VWAP, and we feel like we can be supported. And that adds conviction to take that trade there, and that can help us to be more profitable over the long term in a cycle, right? So we like to do this with altcoins. When the altcoin, typically how crypto works is Bitcoin will run, then Ethereum will run, and then altcoins will take off. Now, I'm going to run you through a whole heap of stuff in a little bit because we haven't really had that broad-based altcoin crazy run. We did have a nice one after we got the ETFs in 2020, basically end of 2023 and part of 2024. But we haven't really had a full-on crazy altcoin mania like we had in 2021 and 2017. And that is because a lot of different things are happening in the background in macroeconomics. I'm going to touch on that at the end if we have time, but hopefully this makes sense. This is the main trade that we want to take. Now, the second one is what we call our outside break trade. Okay. So here is when price breaks outside of the value area. It has a full swing high and we get what we call time and space above the value area high. It comes back and it bounces right off the value area high and then it sends really, really hard. Okay, now that's great that this happens all the time on crypto projects. Let's have a look at how that worked on silver. Now, this is the yearly, right? And this is silver from the start of 2026. Okay, so we can see we got a nice breakout of the value area high here, and it rode the top of the value area high. So that could have been entries all on lower time frames, right? Did really well. Came back inside the value area high. And what happens? It automatically swings directly to the value area low, which it finds support and bounces. Nice bullish engulfing candle. rallies, breaks out of value area high, pushes, comes back, bounces off value area high. That could have been a great entry. Comes back, bounces off value area high again with a nice Morningstar reversal again. So both of these Morningstar reversals, which are entry triggers, this is the first thing that I actually teach our students in our course, how to spot a Morningstar reversal. Because if you can overlay things like a swing failure pattern, Morningstar reversal at key long-term VWAP levels, it works really, really well. And this is a great example here. So bullish engulfing, that's an entry trigger. Morningstar reversal, another pin bar, Morningstar reversal set up here as well, right? And then that leads into the final blow off top, right? And then from here, we're going to pull back. What happens? We have the first pullback on silver. It bounces right off the top of the developing quarterly value area high or yearly as well, because this is all overlaying at the same time at the moment because it's the start of the year, right? And then that has a nice swing high. That could have been a great lower time frame trade as well, right? And then this rolls over and breaks back inside the value area high, and we have capitulation straight to the VWAP, and it bounces off that, right? I actually have another slide updated on silver in here, but I might just get up quickly on my screen if I can. Here it is. Because what happened is, so the bounce here was actually a decent bounce, about 10% bounce, and then it rolled over again. And you can see that it capitulated all the way down, but it still is managing to hold the value area low at the moment, right? And now if we go and have a look at gold, it was pretty much the exact same thing, right? Really nice entry trigger here, pin bar off the VWAP, pin bar off the VWAP, right? Bounce right off the value area high. That would have been another great entry trigger as well for a 6% bounce, right? And then once we get back inside the value area high, what does it do? Comes down and holds the VWAP exactly. Like I've never seen another system on the planet that can provide so many consistent, amazing entries using multiple different levels. Like it's not just like, a lot of trading strategies, it's like, a moving average or something like that. It's like, yeah, it bounces off it or whatever. But this is like, there's so many different types of setups that you can take from using this system just by having the long-term VWAPs on your screen, right? And one thing I'm gonna have to say that is important to use long-term VWAPs that are actually aggregated long-term VWAPs, and it's using data that's accumulated from all the exchanges. Otherwise, you'll get inconsistent levels and they won't be as accurate. You have to get the long-term VWAPs, which are actually aggregated ones that are using an aggregation of all the volume from all the different exchanges in the right splits. Otherwise, it doesn't work. And we have our main man, Slimy Green, or Brendan, who is our developer at Market Mastery, that runs our indicator system and constantly adjusts it in the back end so that we're getting these right. We're getting the right calculations to make sure that our systems are hitting at the right points, right? So here's another example on SUI from 2024 and 2025, right? And you can see how consistently this works. So bounces perfectly off the top here, goes on a massive bull run. This was about a 300 and something percent move, right? And then you can see the new year starts and the market actually flips bearish. Let me see if I can just make this a little bit bigger here. The market flips bearish and you can see that it cannot get out of the value area high and consistently rejects off the value area high. That is the first warning for us. The market is starting to flip bearish, right? And we break below the value area low. And this is telling us that we've been strong and in the market from back here, and back here. And now we're getting sell and exit triggers, right? So not only does using long-term VWAP as a market map for us get us into great entries, it also gets us out before the market capitulates as well. Now we can see as soon as it drops out below the value area low, the market just begins to completely capitulate. It tries to attempt to get back in a few times and just continuously rejects, spends only a couple of days in there at max before it rejects. You never really get proper time and space inside the market. There was a lot going on in the world at this time as well. Israel, Iran war, they were shooting missiles at each other and the Trump tariffs and all that sort of stuff. So you've got to line this up sort of with what's going on with macroeconomics, but then also you're using the triggers of what's happening in the marketplace as well on the chart. So it's sort of like understanding what's going on in the world, then plus using this on top of that helps you really make decisions at the right time. Okay, so break inside here, reject off value area high, comes back down, bounces off value area low, rejects off value area high three times, comes back and bounces off the VWAP. We're kind of in balance here. Then we had the October 10 absolute massive capitulation in the crypto markets. And then this would have been the next trade entry here for another short. Okay, so it just helps to give you a really good understanding of like what the market is doing and what we can see. We already covered gold, so we don't need to go into it again. But this is silver from across 2025. We can see here really nice entry here of $29, which was the previous year's VWAP, right? And then you can see that it's bouncing off at multiple times. We have previous year value area high overlapping with the blue line, which is the developing years. So it's current year's VWAP, right? Amazing level of support through there. Then you break out of the highs here and it goes on a run. Bounces off, consistently bounces off multiple times off the top of the value area. I don't know another system on the planet that can give you entries that are as pinpoint as this. Like, I don't know how else to explain it to you guys, but that to me is just unbelievable. All you have to do in a trending market is look for pullbacks and 4 hour high time frame, daily time frame, Morningstar reversals and pin bars off the value area high. And then once it finally breaks a value area high, that is the trigger to be like, hey, something is shifting in the market here. We need to be looking to get out of the market, protect capital, and leave the trade. So here's a live example, $4,200 on this trade I made over the last couple of days while I was actually going for a swim on the beach in Bondi Beach in Sydney, right? And so here's the proof here, right? $4,000, that's a profit there. Great trade. A nice short there on Ethereum. Now, why did I take this trade? Okay, so what we were just talking about, when the market breaks below the value area low, right? This is a daily time frame on Bitcoin. Bitcoin and Ethereum are highly correlated markets. We've got a pin bar rejection. So it's trying to break into the value area low, rejected. Trying to break into the value area low here again. It did get a nice close inside, but this is actually called a shooting star reversal setup, right? So it's opposite to a morning star reversal, which is what we saw gold and silver consistently doing off value area high. It's the exact same trade, just inverse, right? So rejection here came inside, but I just saw this close here and I was like, nah, that is going to break below here likely in the next couple of hours. And then we get a big capitulation. And then I went across and had a look at what Ethereum was doing. So this is the Bitcoin chart again, just quickly to show you. So the rejection there, and it tried to get back in, and you can see rejection, rejection. And then finally, this is the absolute trigger confirming the trade is when you break back below the value area low through there. Okay. Now, let's go and have a look at what was going on in Ethereum. Ethereum was rejecting at the previous year's VWAP, which is an amazing, really strong level, basically 3K as well, 3,200. And it was rejecting into there. And then we had an ultimate high and then a lower high. So that is a head and shoulders pattern there as well, right? So you have a 1 hour head and shoulders pattern, which is a topping signal right at the $3,000 mark, right at the previous year VWAP, while Bitcoin is rejecting getting back into the value area low, right? So that's telling me the whole market is getting ready to shift lower. Instead of taking the trade on Bitcoin, I decided to take the trade on Ethereum, right? And you see my entry just there at the neckline of the head and shoulders. And then from here, the market obviously then went and capitulated down. And that was a great trade. All right. So that was just a trade that I took over the last couple of days, netting me $4,300. Okay, so the last thing that you need to know, so that's basically rotating and getting extra trades over the cycle. Now, the last thing you need to know and understand is how to do the opposite of accumulation, which is distribution. And now distribution has a buying climax instead of a selling climax. And you have an upthrust, and then you have an upthrust after distribution in here, which is similar to the spring, right? So when the spring or the upthrust after the distribution comes back inside the automatic rallies and the buying climax levels, then we're looking for a rollover to the value area low. And then if that breaks with our sign of weakness, then we roll over from there. So Bitcoin at the cycle top just recently we told all our members if we break this low through here, which is pretty much 107,500, that we need to start exiting the market. So we had been in pretty much this cycle from around the first bullish call that we had was at about 15,800. That was my business partner calling Bitcoin to rotate back to 25K. But we managed to get pretty much our entire community and ourselves into the market between 16 to 20K. And then we managed to get out as soon as we broke 107K. And then the final have to be out of all markets when we broke pretty much 100K because we broke down this area here, which is our sign of weakness, which is basically the same as the sign of strength that I was showing you before. So this was breaking range low, you break the sign of weakness, and then you're done, okay? So that is how you exit the cycle when you look for a distribution range like this. There's a few other ways the cycle can top as well. We're going to keep moving fast, give you guys as much value as I possibly can in 40 minutes. This is probably the best high time frame setup that you can get in any market as a 90+% win rate. And that is on Bitcoin, a weekly swing failure pattern. If you can consolidate a weekly swing failure pattern into a Morningstar reversal, that is probably the best setup that you can get to tell you that the direction of the market is starting to move to the upside. And then from there, we move across into as many different altcoins that we see starting to take off as well, or giving us really good accumulation ranges. And that's how you can outperform Bitcoin while it's getting ready to move to the upside. And things happen fast, right? But a lot of the time, Bitcoin moves first, then Ethereum, and then altcoins. So I like to, when I see stuff like this, I like to take pretty big positions into Bitcoin. After it takes off and starts to move to the upside, then I will start to move down into altcoins and looking for things like value area low reclaims and stuff like that. Just to also show you how this lines up with our system as well, we're having weekly swing failure pattern here, right, which is just a break below the previous low and then closing back above it. Okay, it's a really important strategy to understand how a swing failure pattern works. But hopefully you guys know a little bit about trading and know how SFP works. But you can see here that we had our previous year VWAP, sorry, our previous year value area high holding down price for pretty much the entirety of 2023. But then October comes, which is the most bullish month for cryptocurrency. We break out of the value area high, and that's when we move into markup, right? So this was an accumulation range, and the spring was through here, and then we broke out of that. We had reaccumulation, which is pretty much the same thing, bouncing off the VWAP through here. Then we get confirmation. We're moving into markup, breaking out of the previous year value area high, and that's telling us that we need to be 100% risk on, and then we run from 32K to 126K for the rest of the cycle, right? Okay, so I was going to go through bullish engulfings and stuff like that and Morningstar reversals, but I'm just going to do the main one, which is the key reversal factor that I look for of any of the levels and also on the weekly time frame for major high time frame swings. That's when you have a down candle like this, right? And then we have a pin bar candle in the middle. And then the next candle, we want to see break up and close above the 50% confirmation level. When you break above the opening down candle, right? That is when you get an engulfing confirmation level, right? So when you get an engulfing on the push candle or the sell candle, if this is reverse and it's a shooting star reversal, right? That's when the market is telling you that there's big momentum shift happening in the market, and that is likely to cause a high time frame reversal pattern, okay? So that's what we look for of any of our long-term VWAP levels or key levels like order blocks and stuff like that. For a high time frame swing to get started in the market. All right, so I just wanted to touch on the economic side of things. The main thing that we watch for in the cryptocurrency market is the PMIs, right? Which is the ISM PMIs, which is basically a measure of the manufacturing strength in the economy. Every single time this moves and has a swing high above the 50 level towards 60, that is when Bitcoin takes off on a huge run and altcoins move really aggressively as well, okay? And this also matches up with the copper gold index. Now, copper has been underperforming gold, obviously because gold's been going absolutely crazy. When copper takes off, that is a really good signal that the economy is doing quite well, because you use copper a lot more in building and manufacturing and stuff like that than what you do gold. So copper ends up outperforming gold, right? At the same time, the ISM moves up and it's a really strong signal that and manufacturing is doing well. And this is when Bitcoin goes into its hockey stick leg of its bull markets, right? And so what I want to say is a lot of people have been comparing the last couple of cycles when we had the ISM absolutely pumping to 60, 65, and copper and gold, the copper index was going up versus gold. And we're also in periods of quantitative easing, which is our green line through here. That's the Fed balance sheet. When the Fed balance sheet has been going down, we only just finished quantitative tightening on December 1st. We've been in the longest drawdown of quantitative tightening we've ever seen, and that is perfectly lined up with ISM underperforming and copper gold. It's actually the longest period of time that ISM has been under 50 since it's forever since was ever this index was created, right? It's been 30, I think it's pushing 38 months now. And the Chicago board just released data saying that ISM was above 51. So we could start to see the ISM finally pick up. And so this is the fresh chart through here. And what I want to say is that we're expecting the cryptocurrency market to finally have a rotation once the economy picks up. So if everything that Trump and Bessett are doing, new Fed chair coming into place as well, we should see copper start to take off. We should see the ISM start to take off. And that's when things in the economy do really well. And that's when Bitcoin and altcoins, NFTs, and all that crazy stuff will come roaring back as people move further down the risk curve. The last thing I want to share with you guys here is that Bitcoin and gold don't move together. A lot of people say, oh, Bitcoin is digital gold, blah, 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 but they don't actually move together. One goes, the other one goes sideways. When gold is pumping, Bitcoin is going sideways. When Bitcoin is pumping, gold goes sideways. Look back here in 2023, Bitcoin was rallying really strongly while gold was going sideways. Gold then takes off. Bitcoin goes into consolidation for almost the entire year. Bitcoin has a pump while gold pulls back and goes sideways. Gold goes really well while Bitcoin then has its correction. Gold corrects for 6 months while Bitcoin has its rally into all-time highs. Bitcoin has been correcting ever since then, and gold has been going absolutely ballistic. So if you believe that gold and silver are about to go through an accumulation period, it is definitely a possibility that with a shift in ISM and a shift in the copper gold index, and if you think that the economy is going to start picking up under the new admin and new Fed chair member, then it's likely that Bitcoin will eventually recover soon as well and play catch up to gold and silver. So that's pretty much from my presentation. Hopefully you guys learned a lot. If you want to learn more from us, you can click or take a screenshot of this QR code, or the guys will send out a link that you can go to. And we're running another webinar for you guys for free as well on Wednesday, the 4th of February, 8 p.m. And it's going to be not just me, it's going to be all my crew, Critty, Romps, who's our head trader, and Brendan, who is our developer. And we're going to be running you guys through more of our strategies, more of the stuff that I just took you over. We sort of did like a power run through a bunch of stuff, so it might be a little bit confusing. But if you want to learn more about what we do, how we generate capital out of the cryptocurrency markets and play these big cyclical moves to generate amazing profits for ourselves and our members, then yeah, join us for then. That's pretty much it from me. I guess we go to questions and stuff now if you want to start.
Hi, Carl. Yes, we have a few questions coming in.
Awesome.
So, first off, do you use a tool to scan for accumulation?
No, I don't. We have about probably 2,000 active members that are constantly scanning things. But maybe we need to build one. I'll talk to my developer, Brendan, about that to start to look to see if we can build an accumulation radar tracker, I guess. It's a good idea.
Yeah. So basically, you just have your members give you feedback, help you look up some stuff. I
Well,
guess
yeah,
that's
I
it.
mean, typically we're tracking the majors all the time anyway. And what generally happens is Bitcoin will go through accumulation. Altcoins take a little bit longer to break out of accumulation. So it's like Bitcoin has taken off It's like, okay, Ethereum's going to go next. And then, you sort of continue to look down. What are the next majors? You go to coin market cap and you see what coins are starting to sort of grow in market cap a little bit and come into, the top 200, top 100. You scroll through and go and have a look at all of the different charts and see what they're doing. I don't like to trade things that are like really super low market cap. So I never really look at stuff that's like below the top 200 in market cap because it just starts to become a little bit too speculative. And then, we have so many people in our community as well that like focus on, new coins and stuff like that. So when they're like, say, hey guys, check out this coin, like we'll go and have a look at it, mark it up and stuff like that. So it's more like using the power of the whole community to try and find opportunities. But we don't have anything that's systemized to identify because there are so many projects in the cryptocurrency industry. So it's probably not a bad idea to try and build something.
Yep, that's right. Okay. Do you recognize the current Bitcoin PA on the daily as redistribution?
It looks like redistribution 100%, especially because we made a high and then broke above that high. And then as soon as we reclaimed that previous high, I might just quickly show on my chart to show the guys uh, this here. So we had our range high through here, and this is pretty much the range low, right? As soon as we broke above 94K, this area here just ended up being a trap. As soon as we came back in below this area there, that was pretty much okay. My focus is shifting to capital protection, moving out of spot bags and looking to focus on more selling and downside shorts and stuff like that. Because if you look at this, it's pretty much a bear flag, and it's almost exactly the same as what happened last cycle back in 2021. So you can see here that we pretty much had the same thing back there, and we ended up putting the trap above the previous year value area high, came back inside value area high, and then it was over. And so once again, you can use the long-term VWAP system as well to tell you when you're above it, okay, right, we want to be bullish, come back inside here, that's bearish. If it can't get back above the VWAP, that's bearish again. Fall out the bottom just here of the value area low, that's very bearish. Drop below here, that's very bearish again. So you got multiple signals telling you, hey, that's why I love this system because you can't be biased. Like it's very easy to be biased in markets. Like a lot of crypto traders, they're so biased all the time. They just think no matter what, Bitcoin's going to be going up, right? But having key levels on the chart like this, you can't do anything to change or move around. It's like, okay, it breaks below that level, you have to get out of the market type thing.
Okay. So we have some members from different communities here, so some are not very familiar with your terminology. We have a question here. So can you explain about VWAP? How do I get it from my system?
I mean, I'm not sure what trading platform that you use, but in cryptocurrency, everybody pretty much uses TradingView. I think TradingView probably has the best code of any charting software out there. They're really good. I'm not sure, if Go Markets, most trading platforms have some sort of a VWAP on it. But yeah, you should be able to look up, LTVW or something like that. We build our own version, which has aggregated long-term VWAPs in there. And we have a whole heap of other different systems as well that you can get access from that. If you want to join our community, we can give them to you. Otherwise, you should be able to find free versions. I know there's heaps on TradingView. If you just go to the indicators section and type in LTVW, it should come up. Some of them might have to get up like a VWAP, and then you might have to set when it starts yourself and then set two standard deviations either side. But it just depends on what platform you're using.
Yep. Okay. So to ease some confusion further, it's VWAP is volume weighted average price, right? So it's weighted for the volumes traded at a certain price, and you result with the average price for the volume weighted average price for that time frame you're using, maybe the daily or whatever, right? So there's another question on this. Do you start the VWAP at the beginning of the year, uh, or
Yes.
and
So
if yes, why?
these ones are actually automatically done. So I'll show you here on my other screen. One second. Uh, so the way that we actually do it, we have four running at a time. So we have one that's the yearly, one that's the weekly, one that's the monthly, and one that's the quarterly. and drop down to the daily as well. So when you're actually running it properly, you're using all four, and it sort of gives you multiple time frames. And so each one starts at the start of the yearly, the quarterly, the weekly, the daily, the monthly, and you sort of rotate between all of them. But I like to focus mainly on the yearly. My trading partner, who's our head trading strategist, Chris, this is this guy here. He likes to trade lower time frames, and so he'll use trading entries and exits on the daily and the weekly VWAPs a lot of the time as well. But I like to do more higher time frame positional trades, and that's why I stick to the yearly. I think for altcoins, especially, you want to use you want to use the yearly long term VWAPs. But for Bitcoin and Ethereum and stuff like that, if you're trading lower time frames, you can definitely use the weeklies, the dailies, and the monthlies. So that just means that the VWAP starts from the start of the year, the month, or the week. You can also pick like the cycle top or the cycle bottom or the swing top, a local swing high or local swing low or something like that, and run a VWAP from there. And we call that an anchored VWAP. And that also can provide some great entry points as well.
Okay, question here. Not sure if you have time for this, but what settings do you use?
I'm not sure what he means by that. What's
Yeah,
that?
maybe Tom, would you would like to elaborate on your questions? It seems, are you referring to the VVAP? I guess he just, Carl just answered that. Maybe
Yeah.
typed some time ago during your answers. Uh, any more questions? Oh yeah, there's a question here. When do you think, this is unrelated, when do you think the altcoin cycle will start?
The altcoin cycle will start when this takes off. It's called the ISM, so the ISM PMI, the manufacturing index. Once this breaks above 50, and currently it's about 47, once that breaks above 50 and starts to push towards 60, so 55, 60, 65, that's when altcoins will take off. And not before. It's been a very consistent cycle. When the economy is performing really well, that's when Bitcoin breaks out into its hockey stick leg of its rally, kind of like what gold just did. Eventually, Bitcoin will have a massive rally for a couple of months, like gold and silver just had, and that's when the big altcoin season will come into play. Unfortunately, the cryptocurrency industry sort of got destroyed by CZ and Binance nuking the market on October 10. It's still trying to recover from that. I think once it does, the Clarity Act gets passed, you have much more institutional adoption post that. We'll see cryptocurrency maybe make a comeback by the end of 2026. If not, we'll be looking for 2027. But it's more focusing on what the data is doing. And that's why I like to track what the Fed balance sheet is doing. If that's starting to move up, if copper and gold index is moving up, if ISM is moving up, that gives us the tell that Bitcoin should be moving up, and altcoins eventually will then follow and pop off and go crazy.
Okay, yes. And can you explain why? I guess there's a little bit of angst among people who have been following cryptocurrency. Can you tell me why Bitcoin goes down when other assets go up, and when other assets go up, Bitcoin goes down as well? Why? How do you explain this weird anomaly?
It's so uncorrelated. Sometimes it is really correlated. If there's nothing happening in the industry, then it's very correlated to gold and stocks and things like that, and it will pump when everything else is pumping. But what happened recently in October 10, the biggest exchange in the world basically did something dodgy, and they announced there was going to be they were going to fix a bug in their pricing algorithm, and then there was a hacker that took advantage of that while Trump was, kicking off a new tariff war with China, and the market nuked, and it basically nuked some altcoins like 90% in a couple of minutes because somebody took advantage and depegged one of the US dollar stable coins. And that was the biggest liquidation event we've ever seen in the cryptocurrency industry. When FTX went under, it was about $2.4 billion of liquidations. This one was $19.4 billion of liquidations. And so the market is just like really not recovered. So when you have a big event like that, and so many people get wiped out, that is the type of thing that sort of causes the market to decorrelate from the rest of the market. So like gold and silver and stocks doing really well, and crypto is really underperforming. But eventually, what happens is the market psychology recovers. The bigger players sort of rebalance their balance sheet. The exchanges have managed to get out of all their liquidations and everything like that. and then you start to rebuild some positive bullish psychology in the marketplace. You break to a new high, and then we start to break up from there, and then all of a sudden there's this big gap. Everything else is pushed. Gold and silver have like gone to ridiculous market cap heights. I'm pretty sure gold and silver like made and lost double the entire cryptocurrency market cap in like a couple of hours just before. So when you start to get some of that capital rotating into a crypto marketplace, crypto industry, which is so much lower market cap, there's a huge pump that sort of takes off and it plays catch up to where everything else is. So you're sort of looking for those events. Like, why is it decorrelated? It's because something bad happened that influenced the market negatively. And then once the market finally processes that, gets over that, and then it plays catch up.
Yeah, yes, indeed. I think you're absolutely right? Most people are demoralized, right? But that's when I guess that's the best time to accumulate.
That's
Uh
when the opportunity is found.
yep. Okay, so the question uh the guy who asked the question, Tom who asked the question, is asking about the period settings for VWAP, which I guess you did answer, right? You
Yeah,
use
so yearly, quarterly, monthly, weekly, and daily.
yeah, and but most of the time it's the yearly that you use the most.
Yeah.
Okay, cool. I guess that's all the time we have for the questions. We have several questions about what's your view on this crypto and that crypto, but I guess it's all basically leading off the Bitcoin, right?
Yes.
Yeah, and I mean we are not here to give you specific advice on which cryptocurrencies, but we are here to tell you how to have a good strategy that is robust and will help you in these cycles and hopefully the other cycles as well. So these are the
Best
tools
thing to
that
do is focus on things like this. What's the Fed balance sheet doing? What's the copper and gold index doing? What's the ISM doing? When they turn up, Bitcoin will start to go, and then all the altcoins will pop off.
okay, that's a good advice. And yeah, maybe one relevant question is how do you get all this information? Is it in TradingView, as you said?
Yeah, all of this stuff is in TradingView. And if you want us to teach it to you, obviously you can join our webinar next Wednesday and we'll break it down further. And then we also have a 49-hour course, which people can watch. And then we also have our trading community as well, which is here. And there's thousands of people in this community. There's also six of us, some of our former traders as well that post. Former students, I should say, that have done very, very well, built multiple seven-figure accounts. They're posting all their information that they're getting to the community, and we're all sharing all of our information all the time. So that's where you get all
Okay,
the.
cool. Just to wrap up, Carl, maybe you put your final slide where they have a QR code for them to sign up for your Wednesday webinar. That is 8 p.m. Australian Eastern Daylight Time. That would be 5 p.m. Singapore time zone. For those of you who are interested, the QR code is right at the bottom here, but there's also a link in your webinar chat. You can go there to register interest and get more details from Carl. And thanks, Carl, for your sharing, and I hope to see you next Wednesday as well. For those who have more questions, you can turn up on Wednesday and pick Carl's brains. Uh, Thank you. Thanks very much, and we'll see you in the next session that will begin at 10:30 Singapore time, 1:30 Australian Eastern time. Thank you. Bye bye.
Thanks, guys.
Cheers.